Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of April 1st through April 5th, where we'll try to help you make money trading in April of 2024. Talk about our market analysis, our trading strategies, trading ideas, how the markets typically perform in April, and how we can make money trading in April 2024. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of April 1st through April 5th. We keep our notes in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas, etc. We keep all of our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks. And again, you can find a direct link to that Google Drive folder in the description box below. Welcome again, MD, Brian Moritz. Thank you for joining us today. Hope you all had a great week, are doing well. Shortened trading week. So we'll look at how the markets ended up on Thursday, as the markets were all closed on Friday for Good Friday. Hopefully you all had an enjoyable Good Friday. So we'll look at the homepage of FinViz. See again how the markets ended up on Thursday. Again, mostly flat. Dow was slightly up 0.12, NASDAQ slightly down 0.12, and the S&P was slightly up 0.11. Again, the whole week was a little light in terms of volume volatility due to the shortened trading week and the holiday week. We can see we had 61% advancing, 35% declining, 94% new highs, 6% new lows, 71% above their 50-day moving average, only 29% below, got 70%, and only 30% below their 200-day. So again, markets as a whole, very bullish. Got 70-30 now above their 200-day, above their 50-day. And again, we see it ended up a little bit bullish, even though, again, the markets were mostly flat on Thursday. See, the Magnificent Seven was mostly flat on Thursday. Apple down 1%, Meta down 1%. Again, we'll talk about the sector rotation and the rotation in and out of the Magnificent Seven, which is, in my humble opinion, again, the name of the game lately. So we can see energy, a rotation in energy, real estate. Again, we'll see that in the sectors and industries as well. Welcome, Walter Lyons, Gerald Fitz. Thank you all for joining us. Hope you all are doing well. So some news. Where do we think the market's heading? Stocks aren't supposed to roar when the VIX is tame. Inflation moderating. We'll see the PCE data that came out on Friday. Powell reiterates Fed doesn't need to be in a hurry to cut rates. So I don't know if you all heard Powell's speech, or I guess it was an interview yesterday. Again, he just reiterated they're not in any hurry to cut rates, 2% inflation, etc. Same message we keep hearing. Closed at fresh record, strongest first quarter since 2019. So in my humble opinion, it seems like we've resumed the trend of 2019 before the pandemic. Dow, S&P end quarters at record highs. We saw oil pop up into the 83 handle. So again, a lot of support above 80. Talk about Russia further cutting supply. Natural gas trending a little upward now, 175. Gold had an exuberant run, continues to have an exuberant run, broke that 2250. So I think it's got a new all-time high. And we can see the futures are pointing slightly down on all the indices right now. DXY is back up over 104, so we see the decline in the foreign currencies. Again, we'll be looking at and talking about the yen tomorrow. Treasury yields had popped up. Even the 30 was up a bit. See, we're now at 4.35, 4.2. Got a slight inversion with the 5, 4.22. But again, bond yields have all been up, so bond prices down. Welcome back, Easy Mike. Hope you had a great vacation in Brazil. The Ricky Khan, thank you for joining us. Hope everyone's doing well. I'd love to. I don't know if you were in Rio de Janeiro. I've always wanted to see the beach in Rio de Janeiro and have yet to uh, have that opportunity, but I'd love to hang out on the beach in Rio. So now we'll look at the major indices and also the technology components. Again, a reminder, you can find these links in the notes documents as well as on the screeners tab of our ETFs and our watch list Google Sheets. So if we look at the major indices, nice quick link to this screener. You see the Dows, it's oscillating right around that upper trend line. I expect that to continue. IWM actually broke out of its previous upper trend line. Now it's got a pretty nice upward sloping channel. Tested, broke out of that upper trend line, and then got slightly rejected. Again, I expect, further oscillations in that narrowing channel for IWM as well. Again, with we'll see rotations between the indices, rotations between the sectors. Again, in my humble opinion, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some level of entertainment purposes only. Again, all of this is my opinion. But again, I think we see these narrowing channels. Same thing with the Qs. So it tested the upper trend line, got rejected, went down, bounced off the lower trend line. It's got support. Again, I expect, just oscillations within these channels. SPY is hugging those narrowing trend lines very closely. Again, my opinion as to how to make money trading in April and going forward, at least until we get into May, and we'll talk about this further in our strategies, as I think we're going to see, slow grind upward, particularly in the SPY. I expect this, general trend with these slight oscillations to continue. Now the Qs does look like it's flattening out, so I expect more lateral chop in the Qs, and we'll see these pops and drops in the IWM. Again, when we get sector rotations in and out of tech, in and out of small caps, again, I think that's a major sector rotation that we can trade. So if we look at the individual technology components that we have in our screener, again, we can see ARK-K pretty much going nowhere, just flat, just oscillating. Again, pretty flat, not very interesting. Bangs, again, oscillating within its channel. So we get these bounces off support, test of resistance, bounce back down. So I expect it to gain support again. Again, another trend we're seeing is, the buy the dippers and the Magnificent Seven and then the FANG stocks, but particularly the Magnificent Seven are pretty relentless. So every time we get a dip, they're going to be buying the dip in the Magnificent Seven, particularly like NVIDIA and those. So I don't expect this to break down any further, just this continual oscillation. Similarly with semiconductors, although that's going to, again, be more predicated by NVIDIA, AMD. You can see it popped up. It's gone pretty flat in the middle of its channel. But again, it's just been oscillating in that channel. So again, plenty of trading opportunities, short-term scalps, short-term swings. When we see it bounce off this support, get rejected off this resistance, again, you can see those are following the trend lines pretty well. Same thing with the TQQ, the NASDAQ as a whole. The broad technology, you can see it's gone pretty flat, so it may break down, but again, mostly just oscillations, so you can make money trading those oscillations. Biotech's a little bit of a different story. It's broken down below its channel. It's gone flat. It looks potentially a head and shoulders type formation pattern, and it's being buoyed up by positive trial results of GLP-1s, etc. If we get a loss of that, we might see a breakdown in biotechs. Welcome, Ellen Krentz. Thank you for joining us. Hope you're doing well. Easy Mike says happy 25th birthday to the Q. I guess the Q's ETF is 25 years old now. Okay, so now we'll break down and we'll look at some of the other groups, sectors, industries, how they performed on Thursday for the week, etc. Easy Mike pointing out still 20 basis points, 400%. Oh, I'm talking about you. Okay, so if we look at the groups, the sectors, and the industries in FinBiz, we can see again a rotation on Thursday into energy utilities, again more defensive sectors, so out of technology, communication services into energy utilities, real estate. So again, I think this rotation will continue. I would expect, when they get to a dip, they'll rotate back into tech. Again, the AI FOMO there's no indication that's going to relent. The buy the dippers in the Mag 7, no indication, in my humble opinion, that's going to relent. So for the week, we got healthcare, utilities, energy, real estate, again, technology at the bottom for the week. Again, for the month, energy, utilities. So you see the theme. We've been talking about this rotation back into energy, out of technology for some time. Now we're out of first quarter. So another thing we saw this week and we talked about in our Discord was the need for these funds, mutual funds, pensions, etc., that have allocations. They're 60-40 stocks to bonds or 70-30. There are these target date mutual funds, which I'll reiterate I really dislike, but they have an allocation to stocks and bonds. We saw this big run in stocks, so the disparity between stocks and bonds widened this quarter. So at the end of the quarter, they need to rebalance back to their 60-40 allocation, so they have to sell stocks, buy bonds, and typically they're going to sell, the highest value stocks, take their profit out of those. And again, they have to buy a certain percentage of bonds, so now they're rebalanced. So again, that I think that attributed to some of the selling we saw in the Mag 7, particularly like Tuesday, Wednesday. So for the quarter, technology was very strong, real estate, utilities, etc., basic materials the weakest. So again, part of that rebalancing we saw was, selling technology and going into energy, real estate, basic materials. So again, now new quarter. So they'll be looking for alpha for the next quarter. Again, my humble opinion. We look at the industries, so saw a rebound in silver. Gold obviously has had this strong run. Copper rebounded. See some REITs, utilities, all positive on Thursday. So the worst were some manufacturing, travel, lodging. For the week, again, silver strong. We see these, rotations in and out of solar, gold, utilities, real estate positive for the week, oil. Negative gambling. Their colleges tried to restrict some player-based gambling, and that hit the gambling stocks like DraftKings, etc. So we see some REITs were negative for the month. Again, silver and gold have had a strong month. Oil, real estate. So again, we've been talking and watching for that rotation back into real estate. Again, very sensitive to the 10-year bond, the mortgage rates. But again, we're starting to see that rotation into real estate. So the weakest has some manufacturing and again, gaming. So for the quarter, obviously semiconductors very strong. Insurance, oil, copper, the weakest for the quarter. So broadcasting, solar, thermal coal, some REITs, gold for the quarter was weak, but then we saw that exuberant run. Office-based REITs. So let me grab a quick drink and we'll go over the economic data that we got last week. We'll look at the economic data that's coming out this week. Easy Mike's pointing out some of the ETF flows. And it'd be great if you would post those inflows and outflows in our Discord. I'd really appreciate that, Easy Mike. Okay, so last week, economic data pretty light until Thursday. Thursday, we got this core PCE prices. It was a little light versus expectations, flat from previous. So that's positive in terms of inflation, still at 2%. So the Fed should like that. GDP got revised upward. So again, no fear of recession. Above expectations. So again, the economy's, it may be slowing down slightly, but it's still positive. Again, people that are hyping recession, there's really just no evidence of that. Initial jobless claims are continuing, was up slightly. Initial was slightly below expectations. So again, job market's been resilient. We don't see a big spike in unemployment. So again, nothing that the Fed has to worry about. PC prices feel at expectations and down from previous. Consumer spending is still up, so it was higher than expectations. And then we got the Michigan sentiment data again on Thursday this time. Usually I think it's on Friday. So their inflation expectations drop now below 3%. So that's again positive for the Fed. Anchoring inflation is coming down. 5-year expectations dropped from 2.9 to 2.8. Again, positive. Expectations went up. Sentiment went up. Current conditions went up. So again, all consumers, feeling positive. Their inflation expectations slowly coming down. So again, all positive for the Fed in terms of they're making progress on inflation, and they don't have to worry about unemployment. So again, as was noted in that news clip about Powell's interview, they don't need to be in any rush for cuts. And again, in my humble opinion, I think we might get a small cut in June or July if conditions remain about the same, and that just as a token cut to show they're sensitive to the high rates, but also being apolitical. So, and we've talked about that now for several weeks. Again, markets were closed yesterday for Good Friday, but we got PCE data. So we can see again, core PCEs pretty flat, pretty steady as expected. Trade balance was a little off. Again, PCE fine. Personal income a little up, but less than expected. Spending again higher than expected. Personal consumption again positive. So again, consumers still spending. Look at some economic data for next week. I just snipped out some of the highlights. So Tuesday we've got JOLTS. Wednesday we've got ADP non-farm payroll. Thursday we've got jobless claims data. And then we've got the full suite of non-farm payrolls data on Friday. So I'll quickly go over the whole calendar from last week and then the upcoming calendar for this week. But just a quick reminder, as this data comes out, I try to snip it as quickly as possible and post it in our Surf the Markets channel in our Discord. So you can see I'll take a snip out of investing.com and also the raw data and try to post that to the Surf the Markets channel in our Discord as quickly as possible. And again, our Discord's free to join. You can find an invite free invite to our Discord in the description box below, and I'd highly encourage everyone to join and actively participate in our Discord. Again, a great way to get this economic data in real time. Also participate with your fellow BeachBum traders, sharing trade ideas, helping fellow traders make money trading, succeed in their trading career. It's the objective of our community, and we'd love to see our community continue to grow. So Monday we got building permits, a little better than expected. So that's positive for the housing market. New home sales down. Again, we saw a surge in bond yields. Auctions were okay, not great. Housing prices down slightly. So that's, again, positive for housing prices, positive for future inflation. M2 money supply flat. So mortgage rates went down slightly. Mortgage applications down, but less than previous. Again, high mortgage rates. Oil inventories were up, but again, we saw oil prices going up. Again, Russia cutting. Gas inventories up. We talked about jobless claims and GDP. Talked about Michigan sentiment. Pending home sales up, positive, so the new homes are still selling. Natural gas storage dropped more than expected. Again, natural gas prices have been pretty weak. It's hard to see if it's going to trend upward or retest the previous low. We'll talk about that some when we get to futures, and also again tomorrow. So we talked about PCE, retail inventories, slight build. And again, we've got Fed officials all out now talking, and they'll talk about, how soon do they expect to cut. And again, I think the overall message is, you even heard Waller come out and say, maybe we don't even need to cut, or maybe once, or again, you're more hawkish, we'll put off cuts, and you're more dovish, will probably stick to their 3 cuts, in my humble opinion. Welcome, Sydney Osborne. If I missed you, Logan Flips. Glad to see you all today. Hope you all are doing well. So next week, we got ISM manufacturing on Monday. Tuesday, we've got JOLTS. It's going to probably be the most significant. See if the ratio of job openings to people looking is more in balance. That's something Powell's commented on several times. Again, plenty of Fed speakers. Mester tends to be hawkish. Mortgages, ADP, again, on Wednesday. ISM, non-manufacturing. Thursday, again, we get lots of jobs data, so we get job cuts, how many companies are cutting job openings, and then our typical jobless claims. And then Friday we get, actual non-farm payroll data. So again, that will, be something that people will be paying close attention to. If the unemployment rate it's expected to stay steady. So as long as it's not significantly different from expectations, I expect, again, the markets just to continue grinding higher, as we'll talk, at least through the end of April, or near the end of April, until we get the run into the sell in May and go away crowd. We still do have some earnings, but again, winding down for this earnings season. I don't know of anything that's terribly significant. So if you know of any major companies reporting earnings that will be significant to your trading, I would keep an eye. You can look at the full schedule here. We'll also show you in a minute the short schedule in Webull, and also I posted the link to a nice graphic that Webull puts out. They typically, I think, don't update it until Sunday, but you can access that link both via our notes, and also I put it in our Discord, so you can see this is the one for last week, but they'll show the top companies, and then also a little fuller list of the earnings calendar for the week in graphical form, and then also the major economic events. So again, I expect that'll be updated tomorrow, and you can access that via the link in our notes or in our Discord. You can hear, how we trade around earnings via that link to that video in our notes. And again, our next FOMC meeting is until the end of April, 1st of May. So the next decision will be 1st of May. I don't expect any change whatsoever. Just no cut, no raise, just more of the same. Data dependent, need more data, no reason to cut at this time. And we're not getting an SEP, so there won't be any change in their projections at that time. So, okay, let me grab a quick drink and we'll look at the market screen in Webull. Okay, this is the market screen for the online version of Webull. So we like to look at the histograms, look at the top performers, etc. in Webull as well. So we can see for Thursdays, had small decliners, more advancers than decliners, but the percentage of advancement was very small, pretty balanced, quite a few no change. So again, we see typical end of week flow into the NYSE, out of the NASDAQ, although again, this outflow out of the NASDAQ smaller than what we saw prior weeks. Last week was actually, I think, positive for the NASDAQ, and previously we saw major outflows. So again, maybe that rotation out of tech is slowing down. Again, you can see the near-term earnings calendar here in the calendar section in Webull, so you can see who's got near-term upcoming earnings. Look at the heat maps. I want to see the best performing industries for the week. So we see energy, so solar, some household transport, investments, packaging, uranium positive, so rebound in uranium, construction, home building, so rebound in home builders, oil and gas, pretty positive, paper. So not a whole lot of technology. Look at the ETFs. So India up on the Dow, down on the dogs of the Dow. Looks like mid caps in the S&P. Short on the NASDAQ. So again, rotation out of tech, out of NASDAQ. S&P still pretty positive. Up on the VIX. So again, we've got a long holiday weekend, so we might get a little bit of a pop in the VIX on Monday. But again, there just isn't a catalyst for, a major crash in the market or a major pop in the VIX, in my humble opinion. Up on the Russell, up on small caps. Talk about the EPV, I believe, is the short on the on Europe, and we're going to talk about tomorrow. Copper. So industries got copper, industrials, healthcare, financials positive. So we saw a rebound. Financials have been strong. Industrials have been strong. So we might see, in my humble opinion, some rotations out of those stronger sectors. Utilities been recovering. Real estate and energy recovering. Basic materials recovering. Technology mixed. and defensive from Thursday. Commodities, corn, we'll see these in the futures as well. Corn. And we'll look at all these in the futures a sec. Okay, so here's the futures in FinViz. So again, we see this, steady grind upward in all the major indices. Again, my humble opinion, I don't expect that to change much. We see this, exuberant recovery in the Russell, but again, if we zoom out, we can see, the Russell's got some. I guess I can pop that out into another tab. So if we zoom out a little bit on the Russell, again, we can see it's got some room to run back up to its all-time high. It has broken out. It's having trouble breaking out of that resistance level. Finally broke up. So it looks like it's testing this previous resistance level. But again, I think we'll see some oscillation as they rotate in and out of the Mag 7, in and out of small caps. Again, higher for longers puts pressure on small caps that are they're losing money in debt. See, again, the Nikkei's been running very close to its all-time high. It did have a slight correction. We'll be talking and looking tomorrow if we get a retest of that all-time high, and we're looking at short opportunities, and we'll see that in the ETFs in the Nikkei. Same thing with the Euro stock, so it's steadily run up. DAX have been pretty wild, just running up. Unfortunately, I don't have an ETF to short the DAX. We will be talking about one. You can see it looks like Euro stocks may have topped out there. Again, we'll be looking at ETFs to short the Euro, short the Nikkei, can't short the DAX. VIX, again, not exciting. It's grinding slowly higher. We'll see a little bit of a pop over the long weekend. But again, pops have not held, so you can see how quickly they've retreated back. And, the grind higher is very slow. Again, oil broke up over 83, been trending upwards, got support at 80, probably run into resistance at 85. Again, natural gas hasn't been very exciting. It is slightly volatile, but sitting at 175 right now. We'll see if we get a dip back down to retest that low. And if so, we'll be talking about a additional scalping swing opportunity and oil. But again, it's been pretty flat recently. See this exuberant surge in gold, so it's hitting new all-time highs. Again, we'll be talking tomorrow about looking at ETFs to short gold. Silver still hasn't got the full catch-up trade, so again, I think there's still some significant opportunity in catch-up trade in silver. Platinum been oscillating. Palladium, copper bounced up, retraced. Looks like it might be flattening out and swinging back up for another swing up. Corn popped up after rolling over. Wheat popped up after rolling over, so it looks like we missed that bottom again on wheat, and it looks like it's going to bounce back up. Cocoa again been crazy. Looks like maybe it's found a top. Couldn't find a ETF to short cocoa. There isn't actually even one just a long cocoa. There's DBA, which is a general agricultural ETF. I believe Easy Mike's been talking about that quite a bit. Welcome to Crow. Thank you. for joining us. Hope you're doing well. So again, we saw, bond prices have been somewhat volatile. We're trending up, and then we saw a little correction. The bond yields are now in the 4.2, 4.3 range. Dollar again, DXY back up over 104. This is one, we're looking closely at ways to long the yen. It had hit a multi-year low, and there's talk of the Bank of Japan stepping in to support the yen again. So we'll be looking at YCL, which is a ETF to long the yen. We talked about the correlation between longing the yen and shorting the Nikkei. There seems to be a strong correlation between those two. So whichever one presents the best risk-reward profile, best opportunity at the time will be the approach that we take. We're also going to talk about ETFs to trade some of these other currencies that look like they may be at or close to lows. So we've got New Zealand dollar, Swiss franc, Canadian dollar. So when we get to our ETFs Google sheet, we'll look at some ETFs that we found as opportunities to trade some of those foreign currencies. Again, if you're a Forex trader, obviously you can trade those currencies directly, but we don't trade Forex directly. So we're just doing that all through ETFs. So now we'll jump over and we'll look at our ETFs Google sheet, and we'll talk about ETFs that we can use to trade these opportunities. Again, we use our ETF Google sheet once we've identified an opportunity, some extreme that we might want to long or short, particular topic, index, commodity, foreign currency, etc. And we jump over to our ETFs Google sheet, try to find a corresponding ETF with the best risk-reward profile that we like to be able to trade that direction of the ETF. And again, you can get access to our ETF Google Sheet 24/7 to use it in this manner to identify ETFs to support your trading thesis by joining our Patreon at the All Access or VIP level. And again, you can find links in the description for our Patreon, also in the description box below. I want to, as I talked, I want to look specifically at some foreign currency ETFs that I've gotten from the ETF database, and you can also, I'll open that link a second too, as to how you can find these foreign currencies ETFs and get more details on them in the ETF database. And I have all of these in the ETF DB sheet in our ETFs Google sheet. So we'll take a look at that. So let me grab a quick drink, and we'll look at the foreign currency ETFs and look for some opportunities to trade some of those foreign currencies. So again, you can use that quick link in our notes to jump directly to this page. But if you ever want to search for foreign currencies in the ETF database, you can go to ETF Screener, select currency, then you can see the options for ETFs in foreign currencies. You can see how many they have in their database, so you can even do, cryptocurrencies or diversified currencies. And then you can scroll down through the list. Again, you can narrow these down to just the foreign currencies you want to see. So if we just want to see, Aussie dollar, Canadian dollar, Swiss franc, maybe yen, etc., New Zealand dollar, etc. You can narrow that down. As you can see, they have none for the New Zealand dollar, so we can't do anything with that. None for the rupee. There's one for the pound. So again, you can go through and select the particular currencies that you want to evaluate, and then if you want to get details on any of these, you can click on the link in the ETF database. It'll explain the composition of that particular ETF, etc. So again, good way to do further due diligence on any of these ETF, foreign currency ETFs. I had previously grabbed those and put them in the ETF DB sheet in our Google Sheet. And we've got the basic risk reward profiles, so you can see, euro, Swiss franc. So you can see some of these Swiss francs showing a pretty good current risk reward. Support to resistance isn't that exciting, and 52 weeks not that exciting. But again, it's showing that there's a pretty good risk reward for trading the Swiss franc using that FXF ETFs to long the Swiss franc. Dollar up, still positive. That's a G10 currency harvest fund. It's got pretty attractive risk reward profile. Again, probably want more details on what exactly is in that one. And again, we're looking at YCL, which is the ultra on the yen. Again, longer term risk rewards only 1.5. So again, a short term, swing scalp when we get a bottom in the yen. So we'll be looking at that again in more detail tomorrow. But I just wanted to point out, ways that you can research and watch the various foreign currency ETFs using our ETF Google Sheet and also the ETF database. So again, I've been paying more attention to this list of foreign currencies in our Google Sheet, looking for some potential opportunities to take advantage of some of those foreign currencies using our ETF Google Sheet. So we see like the Canadian dollar's getting kind of close. Risk reward's not all that exciting. So we'll keep an eye on that as well. So right now it looks like the yen one is the most attractive to us at this time. Again, euro is close, not that exciting. So I hope that all helps. Let me know if any of you have traded, used any of these foreign currency ETFs, what you think of them. And so if anyone else, I don't have any other changes to our ETF Google Sheet for this week. So if anybody else has any topics that you want to look at, or ETFs or any commodity index topic, etc., please throw that up in the chat. We can look at those. See, here's the cannabis ETFs. It had some positive news with Germany, so it's gotten some attention. So MSOX, we did a video on MSOX a while ago as the best risk reward profile of those. China, yin and yang, short, small pop on Thursday. Talked about corn, rebounded. We can also see some of these. We have the euro long and short in our main sheet. We're watching this EURL for a peak in the Euro Stocks Index, and then looking for opportunities to short that with EPV. So you can see the risk reward profile at EPV. Again, nice short-term opportunity. Not that exciting, but a short-term scalp. Short-term swing, shorting Euro stocks using EPV, and we'll look at that again tomorrow. FAZ, short financials, we're already long FAZ. We'll talk in more detail tomorrow. We're watching GDXD as the preferred ETF to short gold. So you can see it's very close to its low. These guys, all three of these guys, so you can see GDXD's got slightly better 52-week risk reward versus Dust or DZZ. You can see also Dust is slightly higher above its 52-week, DZZ a little closer. So you can pick whichever of these, if you'd prefer to short gold. Right now, again, we're showing GDXD as the best risk reward profile right now. Again, these guys lag the price of gold, so you kind of have to watch them. And GDXD is the inverse of GDXU, so you can watch for top resistance in GDXU to find an entry in GDXD. So again, I am already watching that to see when that turn occurs. Again, we saw that exuberant run in gold. At some point, I expect a correction, and that would be the opportunity. Again, I think this is a short-term nimble scalp trade in gold. The long-term trend, I believe, is going to continue to be upward, but I think there's a nice opportunity to make some money on that correction. I believe the crow likes Dust best. Is that correct, the crow? Again, pick the one that fits your risk reward profile, your trading style the best. Talk about natural gas along with oil or UNG, UNL, short with cold, KOLD. I've been looking, see if the potash stuff comes down. The other thing I've been looking for is opportunities to short the Russell when we get that rotation. So I'm kind of keeping an eye on SRTY. You see that's the short on the Russell, long URTY. Also, we've got some for small caps. So TZA is the short, TNA is the long. So if we see an opportunity to get that rotation out of the Russell back into mega cap tech or something, those are some opportunities. Again, I've been seeing if there's something we want to do in terms of shorting the Russell. But again, as we looked at the chart IWM, it does look like it's got some more upside before it hits its new or hits a new all-time high. If you want to play solar with long solar with an ETF, TAN or raise, again, we just see that violent rotation in and out of solar. Tesla, we've got some individual stock ETFs in both our main sheet and our research sheet. So if you want a long or short Tesla or Nvidia or Amazon, etc., we've got a number of single stock ETFs in our Google sheet as well. Bonds, long with TLT, TMF, short with TBT, or different durations. Again, wheat bounced up, and here's the risk reward for YCL. So again, pretty nice current risk reward. Again, not terribly exciting from a 52-week standpoint. So again, a short-term swing, short-term scalp is what we're looking for. Reminder, you can also see and track the sectors. We've got a sector sheet both in our ETFs Google sheet and in our Watchlist Google sheet, and also you can find the links to those screeners for the major indexes, technology components, also the sector splitter, sector tracker, and the screeners tab in our ETF Google sheet as well. Okay, let me grab a drink and we'll talk about our theme for this week, which is making money trading in April 2024. Okay, again, our theme for this week is making money trading in April of 2024. So we'll look at how the markets typically perform in April using the new graphic that they have from investing.com. See how much I can zoom this in. And again, you can access this graphic in their article on the best times months to trade stocks via the link in our notes. So again, we talked about spring last week in general, and you can see April tends to be a positive month, the most positive in this period. So for the past 5 years, it's been the most positive. So even better than March. So again, best month so far. So it's been positive since 1950. So again, all the reason to expect a nice positive month for the month of April. Then we see that drop off into May. So again, April tends to be positive. Then we get the sell in May and go away crowd. So again, I would expect a nice grind upward through May, and then protect your profits, take your profits before we hit the sell in May and go away crowd. So again, everything's looking positive for April, again, even stronger than March. So I would expect, a grind higher for all the indices. We'll probably see more new all-time highs. Again, there's no catalyst that I know of. It'd have to be a black swan event to cause any kind of drop or less positive performance in April. So, everything looking good. So I think we continue to ride the markets up into the end of April, and then look at protecting our profits before we get hit with the sell in May and go away crowd. So we've done a previous video, and we've shown the previous chart that investing.com had on April. So you can listen to that video. We also just released the short videos on how the markets perform in April, best performing stock market sectors and industries in April. So you can hear those short videos via the links in our notes. Also yesterday or last week, we talked about making money trading in the spring. So you can hear how the markets perform in spring, best performing industries and segments in the spring. So again, everything, positive through April until we get the sell in May and go away crowd, which I don't think you should go away. We've talked about that before. I think there's plenty of opportunities to make money knowing that that is the tendency, as we just saw in the seasonality. Again, in my humble opinion, I think right now it's the sector rotation in and out of the Magnificent Seven, in and out of, when they sell Magnificent Seven, they might rotate into other, AI, particularly AI related tech, or into small caps. Again, you've got and a quarter. Money managers can be looking for alpha. And again, I don't expect the Magnificent Seven to go anywhere at this point. Not a whole lot of positive catalysts, but I think we'll just see that rotation in and out, a lot of chop in the technology sector, pretty flat. And I think money managers will be looking for other opportunities also. We talked about industrials have had a pretty healthy run. Financials have had a healthy run. So we may see a rotation of profit taking out of industrials and financials, and we're kind of positioned for a correction in those areas as well. Tomorrow, we'll also talk about dividend payer stocks and how, while we wait for better setups for swing trading, we're collecting dividends, taking advantage of any dips. Collecting dividends to generate income, also option strategies for generating income while we wait for a swing trading opportunities to set up. So if anyone in the chat has any last minute questions, comments, topics you want to discuss, stocks you want to look at, you throw those back up in the chat. If I missed your question or comment, please put it in the comments to this video or in our Discord. Please tag us in our Discord. We're BeachBum Trading, all lowercase, no other symbols, characters, etc. Anyone else is an imposter. And again, we'd love to see you join and participate in our Discord. So again, any questions, comments, recommendations for improvement for our weekly trading game plans or any of our videos, any of our tools, our community, etc. We also have a suggestion box in our Discord. You can put those in. So we welcome your feedback, and we really need to know what would you like to see more of, less of, etc. How can we improve our videos, our tools, our content? What else do you need to succeed in trading, make money trading in April of 2024 or anytime? So we hope you like this content. We hope you'll smash the like button to hopefully help us get the YouTube algorithm to show us some love at some point. We really do need and appreciate your help if you'd directly share our content with your fellow traders and friends. Again, we hope you're subscribed, hit the bell icon, and select all notifications. We typically release something every day, so we want you to be notified and be able to take advantage of all of our content. Thank you to everyone that participated in the chat and everyone who's watching after the fact. And we'll be back tomorrow for part 2 of our weekly trading game plan for April 1st through April 5th, where we'll be using all this market analysis, trade ideas to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Again, we'll also talk about dividends payer strategies and option strategies of how to make money trading in April of 2024. So if we don't see you tomorrow, we want to wish you a happy Easter, and we do hope we will see you tomorrow for part 2. Thank you again for watching and for your participation and support, and have a great day.